Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see a follow-up to the strong gains on Friday, Justin.
Yeah, it didn't start out that way, but we'll get into that a little bit and also talk about some of the stocks representing a little potpourri of different areas. So we'll talk about Regeneron and Parsons and then finish up with genuine parts.
That we will, but first let's take a look at the major indexes today. The S&P 500 up 1.2%. The Dow leading the gains, though, up 1.3% today. The NASDAQ up 0.9%. The Russell 2000 up 0.4% today, but we did get that follow through day on Friday, Justin. So as you said, it was a little touch and go there intraday, but we did manage to finish the day with a big follow-up to the gains that we saw on Friday. So that is a good sign for now.
Yes, and that was despite the fact that we had some news out of China that really shook the Chinese stocks. We'll get to that in a little bit, but certainly looking at the S&P 500, I think that's where a lot of the strength is. It's kind of in different areas, still not there with the tech. So the S&P 500 is kind of the preferred index right now. The Dow Jones Industrial Average, look, that one has been looking stronger as well. That got above its 21-day moving average line, cleared it very well last week. But you always have to be a little bit cautious, because with just 30 stocks and the fact that it's price weighted, it can really have we saw that, not too long ago, where Amgen was the whole cause of the Dow Jones being up one day. It's a little bit trickier there, but certainly the S&P 500 is confirming that there is strength in kind of some of the more industrial names. Energy is still looking strong. And the NASDAQ was kind of pulled back a little bit by China. Look, we had President Xi go for a third term, a little unprecedented here since the days of Mao, and there was a little unceremonious escorting of the prior leader off, Hu. So a lot of turmoil there. I mean, what was it? The Hong Kong index was down like 6%. A lot of the Chinese stocks weren't down just a little bit. It was like 20% drops in the likes of PDD and Baidu, and
when an index or a thematic ETF down 14% on the day.
Yeah, huge. It's great that it came off its lows, but when you're down 14%, that's little consolation. So KWeb being the China Overseas Internet Index. So again, these stocks were hit really hard. I mean, China has already been a little bit in our penalty box between the delisting fears that were happening earlier on, and and there's certainly
the underperformance.
Oh yeah, absolutely. This is just one more reason why it's not always the best idea to try and pick the bottom on something.
Yes.
You think, oh, it can't go any lower, and then wham, surprise, it can. That's certainly an issue. And look, we're still having to keep all eyes on that 10-year Treasury yield. I mean, that was something we were talking about on IBD Live today. You look at that weekly chart, and you've got to think at some point it can't keep on going up week after week at this trajectory. But it's, so far it has. And if you look to the daily chart, you can see that, one of the things that did help out a little bit on Friday was the fact that the 10-year yield seemed to show a little reversal there.
Yeah, a little down just a little bit. Exactly. Yeah, I know. It's kind of interesting now how we are even looking at the 10-year intraday as a team to see the inverse correlation between what the 10-year is doing in the market. Pretty incredible.
Yeah, exactly. So it's getting a lot of our attention. And, look, what happened on Friday was a direct reflection of, again, this hope of a Fed pivot, right? The Wall Street Journal article came out, and you could see right when it came out how much the market shifted. Look, there was some economic news out today that was kind of still, I think, supporting the claim that things are maybe showing some signs of weakening, and that could kind of bolster the support for that Fed pivot idea. And it's not that they necessarily have to be cutting, but just a pause, just a slowdown, just a waiting to see, how some of the data comes out. Because of course, these hikes, and it's been unprecedented that we've seen 75 basis points after 75 basis point hike happen. That's very unusual, and this is something that is a little bit slow to turn around. So I think a lot of investors would like to see a little pause there, and I think they're getting some hope with that Wall Street Journal article that came out on Friday. But we're
Let's
certainly going to
see.
be continuing to watch that 10-year Treasury. And as for right now, where the market's at, look, we had our follow through day on Friday. We got a follow up today on the strength. I will say I wasn't too impressed with the breadth. Just looking at the New York Stock Exchange, it was a little bit more favorable for the advancers over the decliners, but for the Nasdaq, it was pretty even. For the Nasdaq, so not too impressive there. So I think you have to just still play this cautiously. This could absolutely. I think we were in position for a bounce, but that doesn't mean we're in position for a rally that's going to bring us back to highs. This could very well be a bear market rally. That remains to be seen, but I think you want to be cautiously optimistic, not plunging.
Yes, well said. So in terms of key levels to watch here on the S&P, since it's outperforming the NASDAQ, let's take the key levels here. So we do have those highs from early October that it's right there. It closed slightly below that level. Then next you have the 50-day line. But Justin, I will say, I just looked, this is the furthest that the S&P has been above the 21-day since this brief little power trend that we had, closing today roughly 2%, maybe a little bit more above the 21-day. The last two times it was like 1.2%, 1.3% here, and 1% there above the 21-day. So that, it seems like a good sign that we're seeing a little bit of daylight between the action and the 21-day in a good way.
Yes, it's a step in the right direction. And, to that point, the NASDAQ composite hasn't gotten there yet, right? It's trying, it closed above the 21-day moving average line on Friday, but it doesn't have that daylight yet, right? You do want to see it kind of put some distance above that 21-day moving average line, and eventually above the 50-day line, above the 200-day line. But we're going to have to take this one step at a time, one hurdle at a time, and there are plenty as you're drawing those lines. These are the areas, right, that we have to get above. These are the resistance areas. Any one of them could be something that stops the market in its tracks, like that has happened in the past few months, where it's gotten up to that 200-day line, or it's gotten up to that 50-day line and gotten turned away. So just because we have a follow through day, they don't all work, right? So you have to be cautious. Sometimes they don't immediately go up. Sometimes there is a little bit of back and forth. That happened on the June 24th follow through day that we had. It didn't go immediately up. There was a little bit of back and forth, and then you got the strong rally, and then that rally failed as the indexes got up to their 200-day lines.
All right. Well, now that we have that market perspective, one more quick note on sector action, and that's just a quick look here at XLV, the healthcare sector ETF, up almost 2% today. And underneath the surface, Regeneron, REGN, a strong showing as well, up 3.3%. It doesn't look like volume was really behind the move today, even though we did see above average volume on Friday's upside reversal, and also the strong volume coming into this stock on the gap up in early September. In general, got more blue volume spikes than the red volume here, and an interesting move today for the stock.
Yeah, I like the reversal that we saw on Friday. That I think that was noteworthy. And sometimes you can have heavy volume on one of these key inflection points, and that can drive the stock further.
Right.
You don't necessarily need heavy volume every single day. You do want to see it overwhelmingly on the blue side. As you've pointed out, we already kind of have that. So I'm okay with it not being up there every single day. And, this
Right.
just reminds me of what some of the other members of this group look like. I mean, just take a look at Lilly, which, kind of did a similar thing where it had the gap up, and then it kind of went flat for a little while. And now that's coming up strong. I do have a position in Lilly, by the way. Vertex also had kind of this flat action where it's been going back and forth. That popped out today. I have a position in this one as well. But this is kind of what's been going on in this group. There have been a lot of the biotech stocks that have been looking strong. XLV, as you brought up, that was the leading sector today of the sector spider funds. And XLV is getting some daylight above its 50-day moving average line. So that's a positive. Now we'll have to see it, cross above that 200-day line as well. But I think Regeneron is demonstrating similar action as what we've been seeing in some of these leading stocks. And there were a lot of them today. I felt like, you could just throw a dart and find a health related stock, medical related stock that was showing strong action. So Regeneron had good company in that regard.
Yeah, so even though you weren't super impressed with the breadth, I mean, hey, at least this is an energy, something else.
right, exactly. So
it has that going for it.
Yeah. So we're getting some other areas, and the other thing too is, look, I mean, the other one that was the second highest in terms of the sector funds was XLP, which is the staples. There still is, I mean, XLV and XLP are both considered to be more on the defensive side. So that can happen sometimes, where when you're in those early stages, you still kind of get those defensive areas still showing strength before growth really takes over. So I don't think we're at a point yet where growth is taking over. That's why the NASDAQ is lagging a little bit. But, that's what's working right now. So you got to kind of go with what's working instead of just what you like to work.
Yeah. All right. Well, let's take a look at PSN Parsons in the enterprise software group, but a defense play here, which we're seeing some interesting action in that area, with a breakout here for PSN, a gain of 1.3%, with a little over a week before earnings are due.
Yeah. So it was certainly what attracted me about this one, is that defense being right there in the label. When we have these stocks, we often will put in, hey, what is it that this does? What's a quick summary of what they do? And defense was a big thing there. That's another area that we're seeing some strength in, where a lot of sideways action was happening. I think I had talked about Northrop before, NOC, how that just seemed like it was going sideways in a little choppy fashion. But now it's finally gotten above that 500 level and stayed above there. Before, it just kind of popped its head above there and would come back down, but now it's acting much differently. You have HII, which is also looking very strong. That's kind of extended its gains, although it reversed a little bit today. Lockheed, LMT. So getting back to Parsons, even though Parsons is in computer software enterprise, it's got that defense thing. And in fact, I was looking up to see if we had any stories on it, and Matt Galgani just wrote a story on Friday, which was kind of talking about Parsons being this World War II era. That's when it came out, and some of the things that it had going for it in terms of contracts with missile defense and infrastructure for different projects. So they're getting some good sized contracts. $16 million here, $20 million there. That starts adding up to some real money. One thing to be cautious about on this one is it is a little bit lighter on the liquidity side. This is a $44 stock, only trades on average 320,000 shares. So it's below the dollar volume that we usually like to see. But on the plus side, it does have some ownership. If you go to that related information, one of the things we like to do a lot of times is just see if there's any IBD mutual fund index owners in there, and Lord Abbott Developing Growth is in there. And we really respect what the Lord Abbott guys are doing. We've had them on some of the podcasts before, and we just had Vernon Weiss at our Founders Club. So they're in line with what we look at, and
great.
So that's kind of a good seal of approval there.
Good stuff there. And also, not a lone wolf in its industry group today was GPC, Genuine Parts, with a breakout of a gain of 5%. This one did have volume behind today's move. And we're also seeing an RS line blue dot, Justin. Looks like a pretty strong close here, too.
Yeah, I mean, this is one we've been talking about this group for a while. The retail wholesale auto parts group has been showing strength. It's number 28 out of 197. AutoZone is one of the stocks that we've been talking about in this group. O'Reilly, they were also breaking out today. So this is an area where I think what's attracted me to it is that, I mean, between the supply chain issues that we had with chips and cars and, the used car market being tough, you've got people potentially going back to work and maybe a little bit hesitant to use mass transit. And, all of that, and plus a potential recession coming, very high inflation. All of this kind of makes for a case for people to put band-aids on their old cars instead of going out and buying new ones. And
Right.
that's where these companies really, they can really excel. Last time I remember AutoZone having a very great move was, after
Yeah.
in 2010. If you go to the monthly there, I mean, that 2010, it wasn't a screamer, but man, it just, was this steady move up, and that was in a recessionary environment after the great financial crisis. And there was also a time period there where we were at a 12-year high in terms of the age of cars on the road right now. And what happened 12 years ago? Well, that was 2010 when AutoZone had its big move. I think the average age of cars on the road at that point was 11
Mm,
11 years old.
there you
So we're
go.
we're getting up to that level now, and that's where these auto parts guys really excel in that kind of
Yeah.
environment.
When you talk about cyclical stocks, decade long cycle.
Yeah, right. And
That's funny.
to some degree, I mean, that's one of the benefits of kind of being around long enough.
Yeah.
You see some of these things kind of replay out, and you're like, oh yeah, I remember.
Yep.
I remember the Cars for Clunkers program, and or what was it? Cash for Clunkers
Okay. Yeah. Yeah.
program.
Yeah.
Yeah, and what happened during that period and what was going on. So that is something that's gotten my attention. And there was also Jed Graham did a nice stock of the day article on that today. So I think that's worth checking out as well.
Fantastic. Thank you so much, Justin. And thank you so much to everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So we hope you join us for David Ryan's thoughts on current conditions in addition to the rest of the awesome Tuesday crew. So we'll see you there, and we'll see you right back here tomorrow.